Hey everybody, Gary with Basecamp Trading. Let's take a look at a way you could have traded the NQ today. This is our 30-minute chart on the NQ. Now today was non-farm payroll day, so we know that that has the potential to move the markets around, and it did today. This was when the news was released, and as is very often the case with non-farm payroll, price kind of jerks around a little bit. You can see it pushed down initially and then made this nice, actually pushed higher than down, and then made this nice push to the upside. Nice strong close to the upside. All moving averages in alignment, momentum bullish, everything looking bullish on this move. And the indexes have been just slowly climbing for the rest of the day. We had a really good jobs number, and that's been bullish for the markets. This is our 2-minute chart. And right in here is when we had our news release, and you can see it pushed up, pulled back, and then went higher, broke above our mid. These are our gravity lines that we use for support, resistance, and targets. This is our mid. We know that's an important line. We broke above that, set up the bull flag right here, went into a little bit of compression, triggered the bull flag to the upside. Your entry would have been in around 13,602 to 602 and a quarter, give or take, right in there. And on NQ, you want to risk 10 to 20 ticks. I mean, 10 ticks is only $50, 20 ticks is $100. So 10 ticks below the low would have had you down around 1582 or so, give or take. So you need to risk a little bit on here. Not a big deal. But you had anywhere between $50 and $100 risk on that trade. You went into expansion, and then you compress sideways. And on the 2-minute chart, this is something that you will see a lot. You move in periods of expansion, compression, then expansion, compression. And you can see you pushed up, went into some compression right here. Never really took any heat. I mean, the low of this sideways movement was 13,604. So you never even went negative on here. So you were positive, went into this period of compression. If you did get scared out, you still had a nice entry. You went into expansion, you compressed, and then you broke to the upside in more expansion. Assuming you were still in the trade, no reason to have gotten out yet. You had some resistance right here, this little cluster, pushed up above that, went on up into your next target, and you can see had found some resistance there. You went back into a little period of compression, and then you expanded again to the upside. And now you had that ruby line up there at 13,773. That would be your next potential upside target. Pushed higher, pulled back a little bit, and then started going sideways. We were getting extended on our 30-minute chart. We had hit significantly overvalued a couple bars in a row on the 30-minute chart, and you can see you're forming some bearish divergence here on this 2-minute chart. Right here, Trender Pro 2.0 went from bullish bars to a neutral bar. You had a close underneath the 18 EMA with bearish divergence. Not a bad place to go ahead and take take your trade off. Take profits right there. The low of that bar was 13,733. So, and you were in at 602. So you can see, you had 130 ticks to the upside on that trade, or roughly $650 per contract. You only had anywhere between a $50 to $100 risk to make $650. Nice risk reward. And again, that's how markets move. You go into periods of expansion, compression, and this is a 2-minute chart. So these are short-term periods of expansion and compression. Get the nice push up, compress, another push up, compress, another push up. And, usually after the second or third wave, you're looking to possibly end your trade anyways. But as you know, we trade to targets, and that target was up there. So that'd be a potential target you could go after. started to get extended, getting some bearish divergence, wasn't looking like you were going to get there, so a good place to take profits. Nice profitable trade, risking $50 to $100 for potential 650 or maybe even a little more depending on how you decided to trade that, because you were up over $700 at one point in time. So it's a very nice risk reward. But again, you can see that's just how the markets move. Here, let's take a look at kind of another example. Right here, you made a nice break to the downside and you went into expansion. You compressed sideways, you expanded down, compressed sideways, expanded down, pulled back a little bit, had another period of expansion to the downside, compressed, expanded to the downside, more compression, expansion, compression, expansion, compression, expansion, and you start to get extended. And that's how the markets move, So it's really good on these 2-minute charts. That's a good way to get into a trend if you miss the initial entry. Good way to potentially add to your trade, because this is how markets move. Markets don't go straight up. They don't go straight down. They go through these short periods of, these short-term periods of expansion and compression. And that's a great way to trade these 2-minute charts. You can really take advantage of those types of scenario. And of course, we like to be in confluence with our higher time frame charts, and use a 30-minute chart like today for guidance and take advantage of the short-term periods of expansion and compression.